Joining me now is Chuck Lieberman, Managing Partner and Chief Investment Officer at Advisors Capital Management. Chuck, it's great to have you on the show this morning, and of course a lot to digest as always. But with a 10% recovery for the markets, do you think that bodes well, that's a good sign for investors ahead?
Yeah, I do, Kristen. It seems that the market reacted very strongly after the much larger than expected tariffs, but that caused the administration to pull back a bit. And of course, we're waiting to see how those negotiations go with our trading partners. They clearly are underway, possibly with the notable exception of China. But we expect China to be among the last to negotiate. There are a lot of other countries that are more vulnerable, and we do expect some progress there, but it will take some time to work out.
And now we do see that Treasury Secretary Scott Bessent saying earlier that it is up to China to de-escalate. And we had heard some comments from President Trump that there might have been progress there on those negotiations, but not much from China on that particular front. What's at play here, and how do you think this proceeds?
Well, China has a very difficult situation because they export nearly $5 of goods to the United States for every dollar that they import. So the trade imbalance with China is very, very large, and that's only the direct trade imbalance. There's also an indirect trade imbalance because China exports a lot of stuff to other countries like Vietnam, and then Vietnam continues to re-export to the U.S. So there's a lot of risk for China. It doesn't want to concede anything. That's typical of them, but they're going to have to figure out how to address this trade imbalance, and they're not going to be let off the hook, it doesn't appear.
So in terms of a 10% rebound, do you think it's range-bound, Chuck, or could we actually look at revisiting, in fact, I should say, that February 19th intraday high for stocks?
Well, the market is a roller coaster, as you know, Kristen, so you can't rule anything out. But as far as I'm concerned, I think we've seen the lows. We've seen peak fear. From here, there are going to be negotiations. They won't be smooth. I'm sure there'll be disagreements along the way, although much of that may be held behind the scenes. We may not see those disagreements. But as some announcements are made of some deals with some countries, that's going to contribute to the market feeling a lot better. And so I'm inclined to play it from the long side.
What about concerns, though, from business owners and shoppers that we could see empty shelves ahead, that prices are going to rise? I mean, based on the consumer sentiment data, consumers see the pace of price gains more than doubling here in the months ahead.
Yeah, well, keep in mind that if there are empty shelves, it means that some foreign companies are not exporting to the U.S. And that will hurt them at least as much, if not more so, than hurt American consumers. Obviously, American consumers still want to get the goods that they need or want. Empty shelves would be problematical. It would force them to buy something else. But that's part of the objective here. Trump is trying to get American consumers to buy more American. So it may not all be bad.
Interesting. So in terms of where we go from here on the jobs front, Chuck will also have a jobs report for the April numbers on Friday. 130,000 jobs expected were added last month. Does this impact the labor market?
It's a reflection of the labor market, and it actually is still a little bit on the strong side. Demographically, the supply of labor is adding about 75,000 workers per month to the labor force, give or take 25,000. So anything over 100,000 is still a solid report. We have been able to hire more than that over the last couple of years, simply because of the open borders. There were many immigrants that came across the borders, most of whom were looking for work, and they were able to find it. But with the borders now pretty much shut, it's hard for us to bring in more labor, and that tempers the pace at which job growth can be sustained. If we continue to see job growth in the 150,000 per month range, that would tend to push the unemployment rate down.
Yeah. Well, I am interested, Chuck, as it pertains to these technology companies, because we know prior to the recent sell-off that we had seen in the market, really spurred by tariffs, that these technology names, the so-called Magnificent Seven, had led the way higher for many years of this bull market in the wake of COVID. And we'll hear from four key companies today. What do you think is most important for investors to learn from these companies when they do report?
Well, all of these companies trade at very high multiples because they're expected to continue to grow at a very rapid clip. That's why they led the market higher, and why, when the market sold off, they were more vulnerable, and so they led the market lower. They're a big chunk of the market, well over 30% of the entire S&P. But that means that they're critical to market valuations, market indexes. So we continue to expect them to be a critical piece here. If business looks good, if they provide some forward indications that they're seeing good orders, that's going to be very positive for the market. Of course, vice versa.
Mm-hmm. International equities, any thoughts there, Chuck, amid what has been a recovery in some of these international stocks?
Yeah, the international sector has been really weak for a very long time. And we've seen a much better performance of international stocks recently. They are still relatively cheaper than US stocks, but they also don't have quite as much growth. So I'm not sure that the cheapness is inappropriate. It may well be appropriate. But certainly the outlook for Europe is improving.
Mm-hmm.
They're going to be spending more money, especially on national defense. Their performance has been relatively weak, and the governments want stronger economic growth. So I think Europe will do better, and that, of course, implies that European stocks should also do better.
Chuck Lieberman, Managing Partner and Chief Investment Officer at Advisors Capital Management. Chuck, thanks so much.
Thanks, Kristen.